Hello and welcome to the podcast hosted by myself, Louis Kessinger, and my dad, Tommy. We are a part of the Kessinger Lee Group at Baird and have been serving investors in our area for 4 generations. Our goal is to start a conversation around topics within the world of finance and to educate you, our listeners. All right, welcome back to another episode of Father-Son Finance. Today, we are going to be talking about the change from being a business owner to being an investor, and that comes with the sale or the retirement or the succession plan that you have in place for the business that you own. And so when that happens, you get a windfall of some sort, and then you are left to create your own paycheck with that windfall. And so we deal with a lot of clients who are going through this, and today we're going to kind of walk you through the steps of what that looks like.
Yeah, and so we have business owners who sell for a lump sum, so they get the full amount up front.
Yeah.
We have business owners that create a owner-financed sell, so maybe they're getting a check from that business over the next 10, 12 years, whatever they work out, or a combination. They get a lump sum for a big portion of it, and then they get payments over the next 5, 10 years, depending upon what that is. And so each business owner is different in how they come into this. But the same thing is true regardless. You are selling your business that you've put your blood, sweat, and tears into to someone else.
Yeah.
They now control it. You now have less control, but you have a bigger pool of money to do something with. So huge emotional shifts.
And I really like, this doesn't touch on advice for that or anything, but I really like what our business partner, Chris Lee, always says. When you get that payout and that check clears, he always tells people, hey, go to the ATM and take out $20 and print the receipt, because you worked your butt off to build that business and you just got rewarded for it. And something about seeing that number on a little piece of paper is pretty cool. It's like a little trophy,
right?
And I always like when he tells people to go do that. So I just wanted to throw that in there.
Yeah, and take that receipt with you in your car. Don't leave it at the ATM.
Don't leave it, especially if it has your name on it.
Yeah, we've heard of stories like that. So that's a good pro tip there. But there is a huge emotional shift. I mean, a lot of business owners who have built this either with their family or on their own have been intimately involved with day-to-day operations, signing the front. We always say it's different signing the front of the check than it is signing the back of the check.
Yeah.
And so you've got to really work through some emotional items there of, I'm relinquishing control.
Yep.
It's time.
Yep. I'm no longer in charge.
Right.
It's not my responsibility.
Yes.
And that can be really hard, especially if the business has your name on it.
Yeah.
So I mean, that's been your career, and it's what you know every day when you wake up. Every night when you go to sleep, you're thinking about, how can I make this better? Who should I hire? Who should I fire? Every life decision really that you make is around your business, and it's a huge shift because A, you don't have to make those decisions anymore,
right.
But B, you've got other decisions to make that you are not familiar with making.
Yeah, so you've got this, we listed here, you got this common feeling. It's exciting, right? I've done a deal.
Yeah.
The thing I built, I am selling for a number that I never dreamed I was going to be selling that for. So that's really exciting. I got a little anxiety. What's next? That's the biggest thing. I don't know what's next. That's okay. This sale of the business gives you an opportunity to breathe, to take a deep breath and go, okay, now what is it I actually want to do? And so that should help with the final emotion that we've listed here, which is uncertainty. And when we say uncertainty, you've sold for a certain amount.
Yeah.
But now I got to do something with that certain amount.
Yeah.
Whatever it is.
Yeah.
I will say a lot of business owners who sell to a bigger entity, a lot of times they will keep or they will reinvest a portion of those proceeds into that operation. Some don't. It all depends.
Yeah, it totally depends on the agreement, and I mean, a lot of times the purchasing entity will want you to invest, or maybe
for a period
even
of years
require you as a part of the transaction to keep you involved because you have been such an integral part of that business, and they need help integrating that business into their own. But again, that post-sale period can look different because maybe you sold your business at 30 years old.
Right.
You're not ready to retire. You're ready to start the next business.
Right.
Or, hey, I'm going to take a couple-year gap and then start the next business. Or maybe you're 70 and you can't wait to retire, but you still don't know what that means because you haven't done it yet.
Yeah.
So, again, it can look a ton of different ways.
Yeah, I agree. And it's funny enough, we have experience with all of those different pieces of the puzzle. But I will say, when you sell your business, once you get to the closing table, checks are exchanged, contracts are exchanged, guess what? You got a brand new partner.
That's right.
And that new partner wants their cut. And
who's that partner?
That's Uncle.
Oh,
Uncle Sam.
Uncle Sam. Yeah, he always gets his cut. But, we always say, hey, paying taxes isn't the worst thing in the world. It means you won. It means you made money somewhere along the way.
Right.
So he's going to get his cut, and you really need to consult with a CPA. And if you've made it to that point of the business transaction, you likely have some number crunchers in your corner. But that is really, really important when you look at that final sale number to know, hey, that unfortunately is not all mine.
Right. And you need to set that aside depending upon where in the calendar cycle you are with your sale. A lot of businesses will sell towards the end of the year. You see the most transactions in the fourth quarter of the year, that sort of October to December time period. And lots of reasons for that. Deals take a long time, but a big reason there is you get that money. You're not going to make a lot of estimated tax payments, but you do need to set aside because you're going to owe that come April of the following year. So we always say estimate it, be conservative, work with your tax advisor, put that in a liquid, interest-bearing account, and don't think about it.
Don't think about it.
And maybe with a little luck, it'll earn some interest, and maybe through some depreciation or a cost basis adjustment or what have you, then you get to keep a little bit of that bucket too. So it's super important to not do anything crazy with those dollars. And if you are a serial entrepreneur and you've already got the next business lined up that you want to do, don't roll the whole amount into the next business because Uncle Sam wants his cut.
Yeah. And so there's the first number. I was going to say number one, but that could get. So the second number that we talk about with business owners is, and really any investor for that matter, is the sleep at night number.
Yep.
And so for the rest of this, let's just say you sell your business for $10 million and you hold a third of that for taxes. And then, so now you're left with $7.5 million. Way to go. Yeah. Congratulations. You crushed it. What's your sleep at night number?
Yeah.
Do you want to talk about what that is?
Yeah. So the sleep at night number is the one that has liquid capital in a place that you can get to it overnight during the day.
Yep.
To do whatever it is you need to do.
Yeah.
But most importantly, it is so that you don't worry about, the new business you're invested in, the new portfolio of stocks and bonds or whatever it is you're invested in. But that's the piece. So when you owned your business that you sold for $10 million, maybe you had a factory and you would always pull up to that factory and be like, if people quit buying my stuff, I know I can sell that building for $2 million.
Yeah.
and that was your sleep at night number.
Right.
You didn't call it that, but that was the Alamo. Like, no matter what, that building and that location with that real estate, with that dirt is worth $2 million. So maybe the first $2 million of the $7.5 million needs to sit in short-term money markets or treasuries or something like that until you work through, okay, I don't need that much.
Yeah.
Or I need more.
I need more.
Yeah. Well, and we always tell people we're totally agnostic. It's not our sleep at night number.
Right.
People will ask us, they'll say, well, what do you recommend? I recommend what'll let you sleep.
And that is a number that, you start with a certain number. So, for example, for your example, you said $2 million. You start with that. A year from now, maybe you're invested and the market pulls back, and your sleep at night number, you're not being able to sleep at night. So it's probably a little bit higher than $2 million. But you also, on the flip side, you may be looking at that $2 million and saying, golly, the market's up, and I just can't believe that we don't have more in there. And that doesn't always mean in a bull market that you need to put more in because you haven't gone through the bear market yet. But it could mean, hey, you don't need the $2 million. So that's all that to say, it's an adjustable number.
And the other thing is, you've been running this business, you've been doing this for however long. I'm okay with people keeping a little higher level of liquidity that first 12 months.
Yeah.
This is new. Everything feels different. You're not in control of that anymore. Your whole routine is different, and you need to be careful when your whole routine, your identity changes in that regard. So the next piece of that puzzle is you've been in that business. Well, even if you're the owner, your CPA is going to make you take a paycheck. So in some form or fashion, you're getting a paycheck, right? Whether it's a W-2, whether it's a dividend distribution, a pass-through distribution on an S-corp, or whatever. Combo. You got to live, so you're going to get paid. So you've sold your business, you've paid Uncle Sam, you've got your sleep at night number. Now you got to replace your living expenses.
Yeah, which a lot of times is a lot more fun to talk about because numbers 1 and 2, we just told you, hey, congrats, and now don't touch any of this money.
Yeah.
So the replacing the paycheck is a bit more fun of a conversation than the first two. But it's just as important because you still have expenses.
Well, you may have new expenses.
Right.
That car you've been driving that was the company's car that is paid by the company and it's a business expense.
Yep.
Well, guess what? You don't work there anymore.
Yeah.
That's your car. You got to pay for it.
And there's likely a lot more expenses that looked like that that are going to change into your name.
So it's really important that you understand in detail your spending needs. Whatever they are.
Yeah.
And it's okay. And be honest with yourself.
Yeah.
And remember, like, oh yeah, I got to pay the insurance. Oh yeah, I've got to do this.
Yeah.
Even filling up the gas tank is now out of my pocket, not the business's.
Right.
And so you need to budgeting. It's a 4-letter word, meaning nobody likes to talk about it. But you got to be realistic and come up with it because then that allows you to back into, okay, I've got this $5.5 million to carry on with this example. How, what do I need from that?
Yeah.
Do I need $100,000 a year, 200, 500,000?
Yeah.
And you got to figure that out.
And then you that conversation starts to blend into the next one because to create your paycheck, your new paycheck, there's a ton of different ways to do it. You can invest in dividend companies that pay high and consistent dividends, and you can kind of make it so that it's a monthly schedule, and you're getting a paycheck each month from those dividends. You can buy bonds so that those are paying you monthly interest payments. And you can also, there's different ways to even do that. You can get, municipal bonds to take advantage of some tax advantages on the municipal bond side. So there's a lot of different ways.
You can buy buildings, other buildings,
right?
and
you
receive
can have
the
real
rent
estate,
and create a different type of income stream. There's so many ways to do it, but here's the thing, and this is super important: you can't forget about growing your assets in your post business owner life. Your business was growing. You were expanding into new markets. You were selling at the same goods at higher prices. Well, guess what? Life out there, doesn't go down. Even if inflation, as measured by the Federal Reserve, is at 3%, then your expenses at that number double every 20 years.
Yeah.
So you're 60 when you're 80. If you need 250,000 now, you'll need 500,000 then.
Yeah.
So some of those proceeds need to be in a growth-oriented enterprise.
And that can look like the stock market. That can look like a new business.
Right.
Again, that can look like real estate. There's all different kinds of ways to invest for growth, but a lot of times, especially right after the sale, business owners like to kind of hold on to it and say, man, I won the game. I want to keep my chips close.
Yeah.
But you can't forget about the future. And so, you really have to look at, hey, what does that look like? And what is the number that I want to reinvest for growth for myself and for my family?
And the good news is, if you've been successful enough as a business owner to get to the closing table and sell for a big amount, you should be used to allocating capital.
Right.
So you've been an operator. You've been managing people to sell items or produce items to sell to others or whatever it is you did. But you have been allocating capital.
Yeah.
You've been hiring people. If you hire people, that's an allocation of capital, human capital, but capital just the same. So in your post, business owner role, that capital allocator hat really gets put on. You're going to need to allocate to these different things. You're probably picking that up from what we're talking about here. But so what are some of the most common pitfalls, Louis, and what are some of the best ways to avoid those?
Yeah, so a lot of times people will say, man, I just turned a small number into a big one with this business. I put everything I had into it. Let's do it again.
Yeah.
And I want to find somebody else who is starting a company and put all my money with them, because if I can turn this big number into an even bigger number,
right?
Like, oh man, let's do this thing. And again, that's why we tell you to go down the line. Hey, first and foremost, you got to pay Uncle Sam. So that money's not even available to you.
Right.
Then you need your sleep at night number. That's available to you, but not for investing for growth. That needs to be on the sidelines. And so you really need to, tug on the reins a little bit and sit back and look at your success and say, okay, how did I get here? And, tamp down the expectations a little bit and not put all your chips back on the table immediately. Because you just got a big check that you're not used to receiving, and putting it all at risk immediately is not probably the best decision. But then, or I guess the way to kind of guard against that is to put together a plan.
Yeah.
And so that really starts in the pre-sale of the business. So before you even get to the closing table, you need to be thinking about, okay, if we sell for this number, maybe here's what it'll look like. But maybe we sell for a little less, so here's what life will look like afterwards. And so having that plan and knowing what different numbers will make your life look like in a post-business owner role is really, really important.
And the other thing to remember is it's a marathon. It is not a sprint. This doesn't all have to be done the day after the closing.
Right.
Again, you got a chance to breathe.
Mm-hmm.
Take a minute. Get good counsel.
Yeah.
Ask a lot of questions.
Yep.
So that is so important, to have a plan. Don't jump around too fast and do things, uninformed.
Mm-hmm.
An informed decision
is the best
decision.
Yeah.
And also, you may have just put yourself in a completely different taxable situation as it relates to your legacy, to your estate.
Mm-hmm.
So, depending upon, we talked about 10 million. What if it's 50 million?
Mm-hmm.
What if it's 100 million?
Yeah.
We've seen businesses sell for 75, 100 million. The biggest one I've been involved in was 500 million.
Mm-hmm.
You got some estate issues you need to think through, some generational thoughts. The old saying is, it's shirt sleeves to shirt sleeves in 3 or 4 generations. Yeah. So the first generation, is in short sleeve shirts, working hard, building their muscles. Mm-hmm. And then the last generation is in shirt sleeves because it's all, they barely have the shirt on their back. Mm-hmm. All the money's been spent. Nobody planned for any of this.
Yep.
So, depending upon how much you are selling your business for could determine how extensive that legacy planning, maybe your charitable intent.
Yeah.
There's a lot of amazing, cool things that can be done. And if you're in Lexington, drive around on UK's campus, drive around in this city, you're going to see the name Carroll Martin Gatton. He did an enormous amount of planning to be benevolent, not just to Lexington, in towns in Tennessee and all points in between. He's really, that's an amazing.
And not just UK. I don't know if you heard about it, but there's a giant park going in at the edge of downtown.
Right.
And that's got his name on it now too. And
yeah.
So you can make a pretty big difference. And just to put a few numbers on it before we wrap up, because you mentioned, hey, depending on the size of the sale, that can put you into some different tax and estate situations where you really need to start planning. That $13 to $14 million range is your first kind of hurdle that you really need to say, okay, hey, I need to talk to an estate planner because there are some estate tax hurdles that start around that area, and the next one would be double that if you're married.
Yeah, 28, 30 million.
So, but if you were to say, hey, I don't need to worry about that. I sold my business for $5 million. Well, if you're 50 years old.
Yeah, it's going to double.
And you're going to invest some of that for growth. By the time you pass away, that number is going to be really, really real. Yeah. So there really is no business sale too small to at least look at, hey, what do these projections look like? Because planning earlier is way better than planning later.
Yeah, agree. So, just some key thoughts and takeaways. Number one, enjoy the excitement. Mm-hmm. It is awesome. Number two, don't have to tell a business owner to be smart with their capital, but be smart with your capital. Get lots of input from trusted advisors. But know that post sale, mm-hmm. you might feel a little lost. Mm-hmm. You might feel like I don't know what to do.
Yeah,
that's okay.
Mm-hmm. It's actually normal.
It's super normal. And so, part of that will be just surrounding yourself with great people that you have probably, mm-hmm. Been talking to as you were building your business.
Yeah.
So go back to that well,
mm-hmm.
and trust those trusted advisors in that regard.
Yeah. And then again, just like the numbers we talked about, keep in mind in that post sale as you're figuring out, what your next step is, keep in mind, hey, I got to hold some aside for Uncle Sam. I got to hold some aside for me so I can sleep at night. I got to then create my own paycheck in whatever, form that takes. I've got to get monthly checks. I then have to invest for myself in the future,
right?
All over again. I've been doing that. I won. Now I got to do it over again in a completely different way. And all the while, I've got to keep taxes and estate planning of mind while I'm investing for my future as well.
Yeah. And so, our team's done this quite a bit with a lot of people, a whole lot of different situations. So, if there's a way we can help, we'd be happy to.
Yeah.
Obviously, hopefully you've got somebody out there you trust. So go see them if it's not us.
Yeah, absolutely. Thanks for listening.
This podcast is intended for informational and educational purposes only. It is not an offer to buy or sell or solicitation of an offer to buy or sell any security or investment or to participate in any particular trading or investment strategy. The information is considered to be from reliable sources, but its accuracy is not guaranteed. We do not offer legal or tax advice, so please consult your tax or legal professional for information specific to your situation. The opinions expressed are those of the speaker and not necessarily those of Robert W. Baird & Company Incorporated. Please note past performance is not indicative of future results, and diversification does not ensure a profit or protect against loss. All investments carry some level of risk, including loss of principal. You should carefully consider investment objectives and risks of any investment before investing. An investment cannot be made directly in an index. Securities and investment advisory services are offered by Robert W. Baird & Company Incorporated, a registered broker-dealer and investment advisor, member NYSE, FINRA, and SIPC. You should consider the investment objectives, risks, charges, and expenses of each money market fund carefully before investing. This and other information is found in the applicable prospectus for the money market fund. Contact your Baird financial advisor for a prospectus. Please read the prospectus carefully before investing. Money market funds are managed to maintain a stable $1 share price. An investment in a money market fund is not insured or guaranteed by the Federal Deposit Insurance Corporation or any other government agency. Although the fund seeks to preserve the value of your investment at $1 per share, it is possible to lose money by investing in the fund.